Right. That was one thing that I wanted to clarify a little bit. So
Sure.
you act as the middleman, basically, between
That's
consumers
correct, yeah.
and, say, the insurance company with the phone company,
Right.
that kind of thing. So you're not, when you say sell mortgages, for instance, you're not actually providing
Right,
them
we're not a
mortgage,
mortgage,
but
right.
you're helping them get the discounts
Right.
that they may want and deserve, but may not know how to get for themselves. It's like a group discount that an employer could get.
Exactly. It's not dissimilar to that, and it's we're not obviously an insurance company. We're not going to be a mortgage lender. We're not a cable company. Our role,
better off.
well, and you know, the more I've learned about these companies, the more I realize that it is quite challenging to provide some of these services well.
Yeah.
We do instead is we do the research that a consumer might want to do on their own if they had a lot more time to do it. So we really do a lot of research to figure out who the right companies are, and then we negotiate with those companies, and then finally we try to make it as easy as possible for people to sign up. So we're a middleman is a good way to put it, but we're like and we're an advisor. We're somebody that's, or I would even say an advocate for our consumers. We're somebody that wants to make it easy for people so that this doesn't take so much time, it's not hassle, and it's not aggravating. And at the same time, we want to make sure that they get the best deal they can.
That's great. I mean, I think that there is this need for the advocate out there. I know as a coach, I end up doing that sometimes too, and it helps. It gives people a real sense of confidence.
Exactly. Yeah.
That they have somebody on their side, that they have someone to call. I find your representative is very helpful and knowledgeable.
Great. Yeah.
Too.
I'm glad that you said that. It was something it's really important to us. That we did a lot of research as we were starting out with this company, and we found that the amount of aggravation that people are feeling towards their banks and towards a lot of the companies that they work with has really grown quite a lot in the last several years. And a lot of that aggravation, I think, comes from the difficulties just in getting somebody on the phone or getting a clear explanation of what a product or service is, and sorting through. There's so much information. There's so many television ads. There's so much information on the web. And it's hard to figure out really what's accurate. And a lot of what we're about is helping a consumer sort through that and really get the best deal. If we can do that well, we have been able to do that well, and we'll continue to. And that's the most important thing for us.
That's great. I mean, there's such a value there. You know, really, it's so obvious. So thank you for bringing that. And what I find too is that when I work with coaching clients is that it really helps for them to actually start knowing where their money is going, and that they have a lot more power over it to make changes, to save money, to start to finance their financial future than they realize. And one of the larger things that they can be addressing are things like insurances, as an example, credit cards, for instance, too. What are you finding when you talk to consumers?
The same thing that you are, that people are frustrated, and they're frustrated for a reason. The cost of cable has grown in inflation-adjusted terms by 60% since 1995. Banking fees are way up. The average person is paying $300 in banking fees. They sort of marginally know it, but they don't really know it. And I think a lot of people have just given up on the idea of getting a good deal and given up on managing their finances. And I think what you do in helping let people know that they are in control individually in terms of their finances is, in a way, what we're trying to do with the group, which is let us as consumers and people know that we're in control. These companies exist to serve customers, and they don't exist if they don't have customers and if they don't respond to us, particularly as we have several thousand members now, but we're growing quickly. And when several thousand is 10,000 and 100,000 and maybe even more nationwide, then we'll be able to continue to get even better deals for people, but also let our members know that we're in control.
Yeah, that you're in control and that they're in control, and money's on our mind,
right?
That's
exactly.
for sure.
Yeah.
So especially auto insurance seems to be on a lot of people's minds with the recent deregulation in Massachusetts. Can you talk some about how you're seeing deregulation affect the marketplace, if at all?
Yeah, deregulation is a pretty radical change. It's had a number of impacts, and it's allowed different companies to be a lot more flexible in how they're willing to price their products. In many cases, this is good for consumers. In other cases, it's not as good. But what it means to the average consumer is that you actually need to shop. Prior to the April 1st deregulation, the prices were set by the state, and they were effectively all the same, and you might be able to get a group discount. Now, prices really, whatever your provider, the insurance company you're working with before, if you were working with Commerce or Amica, their prices could be radically different and much higher than what somebody else might give you. And so it puts the consumer back in the driver's seat in that they can go out and look for a better deal, and they're usually going to find the best deal they can through us, through Consumer United, by the way, because we work with a provider, Plymouth Rock, who has great pricing, and then they give us an additional substantial discount off of that as a group discount. But it gives consumers have a great opportunity to lower their costs, but if they don't pay attention and they don't shop around, their costs could go up and could be a lot more than they were paying, and a lot more than they were used to paying, than they can be paying.
That's a really interesting fact, because you would think with deregulation in general, this is what what people kind of have come to me asking,
Sure.
is, okay, so does that mean that they're all going to get more competitive, and then they're just assuming, I think, that they don't need to do anything.
Right, they're assuming
that
their
company,
down, right.
But really what you're saying is that their costs could likely go up.
Yeah, it depends. It really depends. So in many cases, we have many of our customers call in or find us online because their providers actually raised their rates. But even if your provider hasn't raised your rates, you may find that by shopping around, looking at us, looking at some of the other companies in the marketplace, that your price can go way down. And so even below what you had before. So there's both an opportunity and a risk for people, I think, is how I would put it.
I totally get that. And I think the other thing that I found important when I actually, I do a lot of practice what I preach, and so in research for this show, I actually reviewed my own auto insurance.
Sure.
And it's interesting to actually look at the deductibles and really have a conversation with one of your advocates to understand what really makes the most sense.
I think that's right. Deductibles is one area where we find that many consumers have the wrong configuration. In many cases, the difference between having a $500 deductible, should we actually explain what not everyone knows what a deductible is. So a deductible is, if you have a claim, it's the amount of money that you have to pay towards fixing that claim. So if you have a $500 deductible and a $5,000 claim, you'll pay $500 and the insurance company will pay $4,500. Right. And so forth with $1,000. A lot of people feel like they're better off having a $500 deductible, but many times that'll raise the price of your insurance by $300 or $400. Mm-hmm. And since the average person has a claim once every 8 years, they may pay $2,500 to get that $500 extra in deductible each year. And so, depending on somebody's circumstances, many times it's better to have a higher deductible because it lowers your insurance quite a lot. But the best thing you can do to keep your insurance costs down is drive safely and don't get speeding tickets.
Right. Because speeding tickets will cause points.
Speeding tickets add points. Getting in accidents.
Right.
If you cause an accident, it adds points to your license. And that's as much as we can do negotiating and doing research and negotiating the best deals we can, driving safely and avoiding accidents is what's going to have the biggest impact.
Absolutely.
And the worst thing you can do is drive drunk. You'll have many, many years of very expensive auto insurance in addition to the legal ramifications of that. So we strongly advocate that people drive slowly and
okay, we're going to go for drive safely. That's going to be one of the morals of today's story.
Drive safely and don't drink and drive.
Yeah, thank you. Can you talk, a lot of people claim to save people money, but can you just help us understand specifically how much money you've really been able to save people?
Sure. So we've saved...
We're going to hear from Katie soon.
Yeah, we've saved people... our goal is to get to $1 million in the next couple months. We've saved people between $600,000 and $700,000. I don't know what the exact number is today, but we keep track of it. And that's by saving, the typical person saves between $150 and $500 on their auto insurance, about the same on their home insurance. And then when you add in electricity is typically a couple $100 savings, heating oil is usually a few $100, and our cable phone internet packages range from $100 to $300 savings for the average person. And obviously it depends on exactly what you're getting and what you were paying before. And a whole bunch of other things, but we spend a lot of time doing analysis of what the average is and what we tend to save people, and that's about where it comes out.
And that's all annual savings?
That's all annualized, so that would be every year, yeah.
I was trying to do the math in my head quickly, but that was definitely over $1,000.
Yeah, we've had people save over $1,000 on just one product. So on auto or home insurance, there are times that the savings are really quite big, and as we add in some of these other product categories, the mortgages, the checking, savings, and credit card offers, it really starts to add up. When we started the business, we thought we could save the average person between $2,000 and $3,000 a year if they signed up for all of our services, and